Hello there and welcome to Equity Story. Today we are in a wee bit of a different setup here as we are in beautiful Krakow in southern Poland, and the interview takes place at the Investor Cuffs conference. My guest today here is Łukasz Blichewicz, CEO of Assay Group. Welcome.
Thank you very much for the introduction, and thank you that I can be here.
Well, thank you for sparing some time. Obviously it's a fantastic conference. Loads of people who obviously want to talk to you and network, mingle, all that stuff. So thank you so much for coming.
It's a busy event. I have to admit that.
No. So for your first time, or have you been here before?
No, we have been here before. Yeah, This is not our first time on Invest Cuffs. This is a let's say pretty large event in terms of the investment industry. So it's not our first time.
Okay, fantastic stuff. I mean, it's my first time, so excellent. So I suppose I just want to ask you briefly, to start off, a more general question. So in 2023, what do you reckon is going to be different or the same really in terms of the startup scene here in Poland? What's the outlook in comparison to what we had in 2021 and 2022?
Well, of course, talking about Poland, you have to take into account the, let's say, global appreciation currently of the whole, for example, investment and VC market. And this is something that is very complicated currently because it is struggling very much. And this, of course, has its own effects on Poland because Poland is in a basket of the Central Europe, let's say, environment.
Market, yes.
Exactly. So this is something that you have to take into account because the inflow of the foreign capital is lower, and of course, for example, Western Europe or the US are, basically richer countries that are focused on investing into, currently, in my opinion, into safe liabilities and safe investments. And they are not willing to take much more risk than they were supposed to take, let's say, in their initial strategy. So this is something that the Polish investors have to take into account, also professional investors, because, they will be now more focused on profitable companies than those companies that will be growing value in itself. Unless somebody has quite a lot of cash on hand, then he might, let's say, think in more of a long term and think about the change in the global financial infrastructure within 5 to 10 years. Then we can grow value. But right now, many entities will be focusing on enterprises that deliver basically cash on hand. So this is the current trend, in my opinion, at least. And in the Polish industry, also one thing to take into account is that the previous perspectives related to the EU funds have basically, are finishing the investment horizons, and there will be, of course, new ones, but we might see some gap between the one and another. So
in terms of funding, you mean, or?
Yeah, in terms of funding, I mean the funds that are funded by the government.
So your PFR, your European Union funds,
exactly, the
right.
National Center for Research and Innovation, and so on. So some of those funds, or many of those funds, are finishing their investment funds.
So the tap might be off for a bit, essentially.
Essentially, yes. Exactly.
And in terms of focusing on Poland still, in terms of sectors, across different layers of the industry, business, professional services, you name it. So in terms of startup development and investments, what are the most, in your opinion, obviously, the most interesting and, you can, say the hottest areas, the hottest segments that you can observe at the moment?
So I have to start with expressing one thing, because in terms of Poland, we are between 39th to 40 something place in terms of innovation. I mean, patents that we're doing, and so on and so on. The permissions that we receive and so on. And in terms of GDP, basically, we are between 21st to 24th, depending on who is doing the ranking. But this is a huge gap. We call it the technological gap. So this is the technological even debt that we owe to the global environment, because basically we have quite a lot of innovation. However, we don't know exactly how to commercialize it, because we sell it quite quickly. And in terms of the Polish environment, if you consider it in a wide perspective, I mean the geopolitical events that are right now, like war in Ukraine and so on and so on, this is for sure a country that will grow. However, to do it, we have to focus, let's say, on commercializing what we produce, because we are used to selling, for example, our ideas and our, I don't know, devices that we make and so on. So moving to the branches, let's say what will grow. Many things, however, we were focused so far, the Polish GDP is focused, of course, on services as any Western country is. However, we have some expertise already in various areas, like, for example, we are excellent in IT technologies.
Yeah.
In some terms, I mean, we have quite a lot of experts that we can employ.
Polish programmers, developers,
exactly.
They have a reputation
for example, we are in
yes.
gaming industry, which
Yes.
is doing great. For example, in Poland, but right now it is also growing up. I mean, people are slowly stopping to believe that anything coming onto New Connect, the small Polish, exchange.
The smaller floor of the Polish, the Warsaw Stock Exchange.
But still, those people are on the market, so they will be delivering the products, and they may be commercialized. And for example, this is one of the areas that we are willing to invest in, and we see it as potentially profitable. The other one, for example, is electromobility, which we have quite a lot of wonderful engineers in Poland.
Oh, yes.
That unless they decide to go abroad because they are basically paid better, if they decide to participate in, for example, a startup that is dedicated to delivering new solutions into the international market, it has also seen some successes. But it is impossible to list all of the, let's say, industries that are the most profitable ones. We are as Polish people running away into sort of stable assets. I mean, like
So you mean like Polish retail investors, effectively? Or?
Yeah, the retail investors, exactly. And this is a different story because they are, willing to buy, for example, a property to rent it, and
yes,
that's the investment
which are much more
tangible.
Yes, easier to kind of mentally digest. You can touch, brick and mortar, they call it, and it's slightly of lesser risk degree as well.
And that's what we are focusing on, which is no wonder, because, for example, our recent research that we did during the Assay Index 2023 poll, still 59% of Polish people perceive let's say, buying an apartment and renting it as the safest form of investment. So, it's safe. It's not very profitable.
But I was literally going to say, yes, it's safe, but what's the yield on that?
Yeah, exactly. The yield is quite poor, especially considering that sometimes you are even, going to the bank to get a loan to buy the apartment. So
yeah, easy might be, the spread might be just tiny, right?
Exactly,
and kind of changing the topic slightly. So something that has been discussed a lot during this conference. So ESG, impact investing. So how are these things, these trends, if we can call them that way, how are they going to impact investing in startups? So do you reckon that in the next few years we'll focus more on pure profit, or it will be more like profit but with a sort of better tomorrow slogan over it?
I had an opportunity to speak about that during the latest debate that was focused on ESG, and my perspective is that currently ESG, unfortunately, of course, is the, let's say, a marketing tool, kind of. I mean, in 90% of it. This is the
there's not much difference between this and CSR,
yeah. And the thing is that, to make it change, we have to have a generational change. So the young people are fortunately more focused on really achieving those goals and not only talking about those to increase their sales. This is the major difference that will happen within the next, I don't know, couple dozen years. I don't know if you and I will live to it, but basically this is a long-term goal. And currently ESG and its goals, they are very well described and very noble in the goals itself.
In the very nature, yes.
In the very nature and in the definition, let's call it. But the realization of it is that, well, it's used to basically increase the value of the business or increase your sales or what have you. Yeah? So the trend is correct. I mean,
notionally.
And how it is currently being monetized is not making me feel very happy.
Well, I suppose from the panel that I learned earlier today, you can tell that there is this, even by looking at the questions that some of my colleagues, friends from different branches of professional services, from banks, law firms, brokerage houses, etc., that they send across to me, different thoughts that they shared on ESG, on its utility, its purpose. You can tell that there is this, as you say, there's degree of skepticism, you can put it mildly, and it manifests itself through this sort of weird realization that on one hand you've got all these large corporates and banks, financial institutions who market ESG in the brochures on LinkedIn a lot. There are a lot of events that are focused on ESG and sustainable finance, sustainable investing, and on the other hand, people behind the closed doors, really professionals, some of them do question their actual sincere intentions and the utility of these initiatives, but it's a massive debate.
This is the main problem, because basically the problem is that nobody who is running a business will disagree with the ESG ideas.
Openly.
Yeah, openly.
Yeah.
So this is one thing, and the second thing is who is sincere and who is not. Right now, in my opinion and in the opinion of my colleagues that, for example, I had the panel with, most of the companies that are using those terms like ESG, CSR, or whatever, making donations towards environmental organizations, whatever, but this is a small portion, but it is being marketed like, donate, I don't know, $50,000, for example, to and then you put another 50,000 to PR the fact that you put the 15,000.
Pretty much.
So this is kind of a hypocrisy from my perspective, but well, it's a trend that will be there for a long time. I think this is generational. I think that we'll see it for at least dozens of years, and this is the fact that makes me happier in terms of, looking at the future, the global perspective in the future.
Okay, last question really, and it's coming back to this investment and basically management of your money, your portfolio aspect of things. So do you reckon it is actually worth having a startup investment in your portfolio, and well, why? And if yes, then in what sort of manner of holding would you have to hold such investment for it to make most sense? So would you have it directly, so own shares in a startup company, or should you do it through a VC fund or a crowdfunding initiative? What would you best describe? I appreciate that it will be different for different people, but from your perspective, what's the best manner of holding such investments?
There is no best way. This will be the obvious answer, but basically you have quite a few options in let's say in the market, because one thing is that you can, for example, invest via a VC fund. This is one of the options. Then you deliver the money to somebody who is supposedly, let's say, allowed to manage it and is capable of managing it in an effective way. So it's a sort of passive investment. You can be more active. You can go to I don't know, a chain of business angels, for example. So this is the middle option from my perspective. The last option is that you can invest in a startup yourself. From my perspective, I mean, the first two are better because of the one simple fact that there are organizations who have structures in place to manage those businesses, which is very necessary if you want a high yield. Because basically if you invest early, for example, like we do and many other VC funds do, then you have to consider the fact that you are dealing with, I don't know, 3, 4, 5 people who are not very experienced in terms
as business people. They have perhaps a brilliant idea, but they might not be the best business people on the block.
They have great ideas.
They are grand.
They have great expression. They have a lot of potential. They have a lot of energy to deliver the product into the market and so on. But they are sometimes missing some things because of the lack of experience, for example.
Well, indeed, yes.
And then you need a structure in place to help them deal with those. Yeah. So
it's like a safety net, essentially.
Yes, basically that's it. Yeah. Because you know, if you consider it, if you invest individually, for example, you find a fantastic startup with a fantastic product, and you want to invest part of your savings into it yourself.
As a retail investor.
Without the structure, this is difficult to manage it because you have your own life, you know, you are dealing with your, everyday stuff, what have you. So I would recommend, let's say, to participate in some sort of structure, either VC, business angel chains, whatever, or for example, to deal with startups that are related to your current business, and this is something to consider. I mean, this is the safer way.
Excellent.
Yeah.
Well, I'll leave you guys with this thought. Thank you so much, Łukasz Blichewicz, CEO of Assay Group. So, thank you.
Thank you, guys.
Take care.